Welcome to Signal to Alpha, your essential morning market briefing. I'm Lady Muriel, cutting through the noise to deliver what moves markets today. Let's get your alpha before the opening bell. All right, let's dive into what's shaping the markets this morning. We've got some interesting dynamics playing out across tech, bonds, and commodities that you need to watch. Starting with Apple, Bernstein just raised their price target from $325 to $340, and the thesis here is fascinating. Yes, global memory chip costs are rising and could squeeze iPhone component costs by 15%, potentially hitting Apple's margins by 1.5 percentage points by the end of 2026. But here's what matters more. Apple Intelligence and Siri 2.0 are launching this year, and analysts are betting that AI software features will be the real growth driver. The message to investors is clear. Stop fixating on rising memory costs and focus on the upcoming artificial intelligence capabilities. Speaking of memory, Deutsche Bank is making an even bolder call on Micron technology. Their analysts raised the price target to $500, arguing that this memory cycle is fundamentally different. They expect dynamic random access memory supply to remain tight through 2027 into 2028, driven by the AI boom and heightened demand for high bandwidth memory. The key insight here is that many investors don't yet understand the full scope of this AI-driven memory opportunity. Now let's talk about what the bond market is telling us, because this is critical. Treasuries rallied hard yesterday after December retail sales came in flat, missing expectations of 0.4% growth. The 10-year Treasury yield fell 5.3 basis points to 4.14%, hitting its lowest level in almost 4 weeks. The 30-year bond yield dropped 6.6 basis points to 4.78%. This is a complete reversal from January's sentiment when revised third quarter GDP growth of 4.4% had everyone worried about an overheating economy. Jay Hatfield from Infrastructure Capital Advisors put it perfectly. Those fears were totally misplaced. The weak consumer spending data is forcing traders globally to reassess economic growth and inflation expectations for 2026. Meanwhile, Bitcoin is trading around $67,452 this morning. Mark Hulbert's column argues that fair value for Bitcoin is closer to $55,000, suggesting it needs to fall another 20% before it's actually attractive. That's based on Claude Herb's commodities portfolio management model, which estimated fair value at $53,000 back in October when Bitcoin was trading above $125,000. On the jobs front, we're awaiting delayed January employment data tomorrow, with forecasts calling for 55,000 jobs created and unemployment holding at 4.4%. Markets are increasingly pricing in the likelihood of a Federal Reserve interest rate cut in March as economic data continues to underwhelm. That's your signal to alpha for today. Subscribe for tomorrow's essential market briefing. Trade smart, stay informed. See you at the opening bell.